Asian shares snoozed near 18-month highs on Friday as trade thinned in the run-up to Christmas, and investors seem content to digest the chunky gains already made so far this month. In early trading, the pan-region Euro Stoxx 50 futures were up 0.3% and German DAX futures 0.1%, while FTSE futures were a shade weaker. E-mini futures for S&P 500 ESC1 were at all-time highs, having risen 1.2% in the week. MSCI's broadest index of Asia-Pacific shares outside Japan were steady after rising 1.2% so far this week and almost 5% this month. Japan's Nikkei reversed early gains after reaching a 14-month high earlier in the week. It was ahead by 2.5% for the month so far. Chinese shares were slightly stronger with the blue chip CSI 300 up 0.2%. Sentiment got a boost after U.S. Treasury Secretary Steven Mnuchin said the United States and China would sign their Phase 1 trade pact in early January. Mnuchin said the documentation was completely finished and just undergoing a technical scrub, though Beijing has so far dodged all details of the deal. The number of Americans filing applications for unemployment benefits dropped from a more than 2-year high last week, pointing to a sustained labor market strength that should continue to underpin consumer spending and the economy. While other data on Thursday showed factory activity in the Mid-Atlantic region almost stalling this month, manufacturers received more orders, increased shipments, and boosted hours for employees. Their outlook for capital expenditure over the next 6 months was also upbeat, offering some tentative signs of stabilization in manufacturing amid an easing in tensions in the 17-month trade war between the United States and China. The trade tensions have bruised business confidence and weighed on capital expenditure, leading to a downturn in national manufacturing activity. But a turnaround in manufacturing, which accounts for 11% of the economy, could be delayed. Boeing announced on Monday it would suspend production of its best-selling 737 MAX jetliner in January as fallout from 2 fatal crashes of the now grounded aircraft drags into 2020. Economists estimated that Boeing's biggest assembly line halt in more than 20 years, which is expected to wreak havoc on supply chains, could cut first quarter 2020 gross domestic product growth by at least half a percentage point. The U.S. House of Representatives also overwhelmingly approved a North American deal that leaves $1.2 trillion in annual U.S.-Mexico-Canada trade flows largely intact. The S&P 500 hit a 6-month straight record high, its longest streak since January 2018, and the Nasdaq rose for the 7th session in a row. All 3 major U.S. indexes, S&P 500, Nasdaq, and Dow, notched record closing highs. It was mostly quiet in currencies, though sterling was nursing a grudge after suffering a vicious reversal that left it facing its worst weekly fall since late 2017 at 2.4%. On Friday, the pound was huddled at $1.302, having toppled from $1.3514 peak when Prime Minister Boris Johnson used his sweeping election victory to revive the risk of a hard Brexit. Other currency pairs were little changed on the week, with the euro stuck at $1.116, having found support around $1.11. The dollar idled at 109.31 yen, having spent the entire week in a tight 109.17 to 109.67 range. Against a basket of currencies, the dollar had edged up 0.3% for the week to 97.438, thanks mainly to the steep drop in sterling. Spot gold was flat at $1,479.40 per ounce and up just a fraction for the week so far. U.S. crude eased 5 cents to $61.13 a barrel, while Brent crude futures inched up 8 cents to $66.62. Well, that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data.